I'm asked, well, Director Deal, you were spot on with your gold price forecast last year. What does your crystal ball say about 2025? First, I don't have a crystal ball. I make my call based on an assessment of the forces that determine prices in the 20th century. Other analysts say they do something similar, but many don't. They still assess gold's prospects through a 20th century lens, or they subscribe to outdated conventional wisdom, or they infuse their opinions with political biases. I avoid these traps. Gold rose $560 an ounce in 2024, the largest gain in modern times. I expect the Yale metal to end 2025 above $3,000, making the year the second largest annual gain in modern history, and possibly even surpassing last year's record. Why am I so optimistic about gold? Because the perfect storm of forces that drove prices last year will drive prices again this year. In fact, these forces may intensify in the coming year, which would make my price forecast on the conservative side. What are the forces fueling this perfect storm? Central bank gold buying is one. Central bank buying received a lot of analyst attention last year, but it was less of a factor than many understood. Until May, most of the buying was done by a single bank, the People's Bank of China, which then halted its gold acquisitions for 6 months. The PBOC resumed buying in November, and I expect it to continue buying in 2025 as China marshals its resources for a confrontation with the West. I expect central bank buying in China and elsewhere to be stronger this year than it was last year. Asian retail buying is another one of these forces driving the perfect storm. Chinese retail demand is often underappreciated for its role in setting global gold prices. That role has risen as the Chinese economy tanked in 2024. China strictly limits its citizens' access to asset classes that protect investors from wealth erosion. Chinese real estate, stocks, and bonds have taken severe beatings for several years now, leaving gold the primary means for the Chinese to protect their wealth. As a result, China's consumers have bought gold hand over fist. The Chinese economy will not turn around anytime soon. Retail demand was muted last year during the PBOC 6-month hiatus from the market. But now the bank is buying again, and I expect Chinese retail demand to come roaring back. A word about India is necessary here. If public demand in China is often overlooked by analysts, Indian demand is off the radar screen entirely. China and India regularly trade places as the world's number 1 and number 2 retail gold markets. Together, they represent 2/3 of the global retail market. I expect Indian demand in 2025 to surpass 2024 volumes, another force driving gold upward. Geopolitics and war is another factor. 2024 was marred by rising military conflict in Europe and the Middle East and escalating tensions in the South China Sea, around Taiwan, in the Caucasus, the Arctic, and Africa. In other words, around the globe. War and rumors of war have been a driver of gold prices from time immemorial. As China, Russia, Iran, and North Korea draw closer into an alliance against the West, I expect these tensions and outright military conflicts to intensify this year. We are not in a world war, but we are headed in that direction. And the West is far less prepared for a multi-front conflict than our opponents are. Economic uncertainty is another one of these forces to keep an eye on. I believe Americans are entering 2025 with a false sense of economic security. The economy was strong right through the fourth quarter of 2024. That seems unlikely to last. Consumers and businesses blew it out late last year in anticipation of higher prices in 2025 due to the tariffs President Trump has proposed. We should view this binge as consumers and businesses moving forward purchases they would have made in 2025. As a result, demand will weaken in the first half of this year, and economic growth will slow. Political instability is another one of these forces. Autocrats' favorite distraction from economic problems at home is saber rattling and waging war abroad. Watch Russia versus Ukraine and NATO, Iran versus Israel and the West, China versus Taiwan, the Philippines and the U.S., North Korea versus South Korea, Japan and the U.S. With Russia, China, and Iran in deepening economic problems, we should expect the temptation to grow for their leaders to intensify regional military conflicts. President Trump's muscular approach to foreign relations, his trade policies, and suggestions that he might turn to arms to achieve key policy goals are likely to add to international tensions this year. Political instability reigns in the West, too. Include in that list Canada, France, Germany, Israel, Poland, Spain, South Korea, and the United States. I expect geopolitical tensions to rise, further fueling gold prices this year. And then there's interest rates. Speculation on Federal Reserve monetary policy jerked markets up, down, and sideways in 2024. And last September, when the Fed finally cut the federal funds rate, interest rates consumers and most businesses pay rose instead of falling. Rates are likely to remain high this year, perhaps even rise until the full scope of President Trump's tariffs and the prospects for his ad spending cuts are known. Both would have inflationary effects, since they would raise prices and increase the deficit. Another force likely to support high interest rates this year is $3 trillion in U.S. debt that will mature and have to be refinanced at higher rates in a market that is saturated in global corporate and sovereign debt issuances. If global markets cannot withstand the tsunami of debt, the full consequences are unknown. But higher debt financing costs are a certainty, compounding the nation's debt-carrying costs and undermining equity markets. Another consequence of high interest rates is the pressure they will put on banks. Higher for longer rates would lead to a replay of the 2023 banking crisis, when Silicon Valley Bank, Silvergate Bank, and Signature Bank all failed within a matter of days, and the largest bank collapse since the 2008 financial crisis. Watch for more news on this front as the market comes to appreciate the risks banks face based on their capital, fire-sale, liquidity asset, and bank-run vulnerabilities. Finally, there's the risk of black swan events that we simply cannot anticipate. All of these forces will continue to fuel the perfect storm that is driving gold prices to record after record after record levels. 2024 was a very good year for gold. In fact, it outperformed the equity markets. I expect 2025 to set the same pace. Protect your wealth and tap the extraordinary appreciation opportunity gold offers buyers today.